Good morning and happy Wednesday to you all. It's October 21st, 2015, 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Just like it says on the screen there, um, it's best to view this enlarged. So hit the bottom right corner, hit the square bracket if you're on YouTube. Um, and um, and make sure it's set to 1080p so you can see the prices as crisply and clearly as I'm looking at them. Overnight, not much to talk about. Hong Kong's markets are closed. API petroleum inventories came out yesterday after the close. A surplus of 7.1 million versus 3.5 million expected. Really big surplus there. Second straight build. Um, and then Iran's supreme leader Khomeini approves nuclear deal, orders its implementation, and calls on the West to remove sanctions immediately. So that's good news. Probably going to start the oil spigot towards the rest of the world, putting pressure on oil prices through more supply. But I think that's already been accounted for. Today, as we look ahead at what we should expect, we're looking at the Bank of Canada rate decision at 9 Central, 10 Eastern, so an hour from now, and then crude oil inventories at 9:30 Central, 10:30 Eastern. Expecting a build of 3.5 million in crude oil, negative 1.2 million in distillates, and negative 1 million in gasoline inventories. And as far as speakers, at 11 o'clock noon Eastern, 11 o'clock Central, we have former Fed Bernanke speaking at a global investment summit. He's expected to comment on interest rates. So we'll keep an ear out for that. Bank of England's Carney at noon Central, 1 Eastern, and Fed Speaker Powell at 12:30 Central, 1:30 Eastern. And that's really it for today. It's very anemic as far as the calendar is concerned, as far as the news flow is concerned. Tomorrow's a big day, though. Tomorrow, UK retail sales. But the big one is the ECB rate decision. So we're looking for that. Likely to cause a move in the European indices, in the euro currency, in the dollar index, and therefore in U.S. equities and treasuries. Then we have the press conference with the ECB's Draghi. We're also looking for European consumer confidence, U.S. housing prices, leading index, existing home sales, and the ECB monthly report. Those are all coming in tomorrow. So today is likely to be more of the silence that we've been seeing in the markets. I have a few things that are interesting for you to look at. Let's start off by recapping yesterday. So yesterday pretty much did what was expected for Hypo 1. We opened in the middle of the range, in the middle of value. We opened at 2021, looking for a test of 2020, which we got early on. We pushed to 1950, so we pushed it by 2 ticks. And then I was saying that we have a weak high, and it'd be very interesting to see what happens once we push through that high. Do we hold or do we fall back in? I want to remind you that where we're trading right now, 2029 and a quarter, was a key area from the sell-off day of August 21st. And we pushed through it yesterday by 2 points before selling off. We did leave a high volume node up top. This is not what I would call an excess high. It was up against some pretty serious resistance level up there. But overall, the market did what it has been doing lately, except that yesterday it did not close as we would expect. Look at the similarities here. We pushed through the prior day's high. This was on Monday. We pushed through Friday's high. Friday also had an HVN near the high, just like yesterday did, and just like Monday did. Okay, we push through the high, we pull back in towards the mid, we chop around, we attempt, then we fall to the other side, and then we zigzag our way up. And in the last couple of days, we end up closing in a channel quite bullishly on the close. And here it is on Friday, a pretty bullish channel after testing lower. And yesterday, what do we get? We get more of the same. Test higher, a nice HVN left behind at the top. We pull back, chop around, and then we walk ourselves down, and then we walk ourselves up. Except yesterday, it did not have that buying spree, and for the first time in a few days, we had a negative close with a negative delta. So as prices, as you can see here, prices, oh, this is getting cluttered, prices selling off into the close with a pretty decent selling delta for the type of day that we had. So as opposed to this closing higher with a very strong delta on the close, again, delta, what you're seeing down below here, this is what's called a volume breakdown indicator in Investor RT, the software package you're looking at. If you're interested in this, linsoft.com/FT71. And the delta here is describing the number of contracts that traded on the offer, which gives us a positive delta, and then minus the number of contracts that traded on the bid. We're using tick data. Fairly accurate tick data here using IQ feed. So we're seeing what is trading. And yesterday, once we pushed that high, we got some real delta. But then as soon as we started to sell off, you could see the delta falling off and just not able to get back up above the zero line before it sold off in a close. Whereas before, we would sell off and we'd cross and push through. It seems like temporarily yesterday we ran out of buyers, but I can't say that I'm seeing sellers step in strong. Overall, Hypo 1 worked out pretty well. Hypo 2 was looking for 2007 down here. Hypo 1 was looking for a break higher to 2029, so that's Hypo 1 playing out again as expected. But most of all, if you're just to step back for a minute, if you're thinking that the market has been really tough to trade, then you're alone, because it's really an awesome trade right now. I'm just kidding. It really has been a rough trade. This is, and I'll show you why. This is a pretty tough, unless you're a buy and hold type of investor, swing trader, and you're long. The volatility's not there, and the trade is generally drifty with an upward skew. This is why I don't like rally markets. I don't like markets that just walk themselves up. I can find opportunities in scalping setups, but in real trades, meaning grabbing a pullback, taking a good bite on it, putting on a full unit, and then managing a full unit, this isn't quite the market for that. Does that mean we should all just hang our hats and be done with it, turn off the lights and leave and be done with trading? No, because the market goes through cycles. I've been doing this for 15 years, almost 15 years in January. I've seen this over and over again. Throughout the year, the market cycles through. I talked about this the other day, the streaks and cycles that exist in the market and in life in general. This is just not a great cycle for most. This is a good volatility selling cycle, but but it's really not something that you want to get aggressive with, and it's really important to recognize this early enough not to give up a big chunk of your account before you decide, this is not for me. So seeing this kind of trading where it's just zigzagging very tight, it's not the kind of swings that that are friendly to anyone really. But I'm not saying you can't make money in this. There are very simple scalp setups. You can see the channel that I drew here yesterday. Pretty simple stuff. Channel gets broken, so now we have a channel going this way, and it's just a very low risk, low reward type of scalping situation, and you always take a loss once the channel breaks. But it's just a good time to just slow down, be patient. I responded to someone on Twitter saying, and the reason I'm commenting on this is because I'm hearing it a lot. Man, this has been tough, or oh my God, I just can't get anything done in any market right now. And someone said, man, it's been really rough. Do you have any comments? And the best analogy I can think of, if you've ever watched car racing, is the purpose of racing a car is to get around the track as fast as you can and beat your competitors. However, when an orange flag is up, when a yellow flag or an orange flag is up, meaning there's an accident or there's an issue, there's debris or an obstacle on the track, you don't just go plowing through at full speed. And that's what people tend to do no matter what the market is. The market throws up caution flags. It takes us a while to recognize them. It costs us money to recognize it. But it's sad when it costs us money to recognize it, yet we continue to just push the accelerator and try to make trades happen when there are no trades that we can make happen. And so just like a caution flag, this market, when it goes into this tight balance, I'll show you here over the last couple of days, when it goes into this tight balance type of stuff, this is a caution flag. However, just like a race car driver pulls off the accelerator and gets ready to hit the brakes, when we're in this situation of chopping sideways on anemic volume and just not much interest at all. Look at the delta here. Delta just winding itself around the zero line. This is mostly short-term traders in control. When we do this, get ready for a big move down or up from here, because this consolidation cannot last very long, because as it continues to trade in a balance, more and more money's committed, and eventually those positions have to be offset once the move occurs. So don't let it lull you to sleep, and definitely don't let it cause you to be complacent with your trading. Stick to your plan. If you hit your limits, stand by. Wait for the next day, and so on and so forth, so that you're ready when things happen. You're ready to move on them. But in general, when we see this sort of consolidation, chop, no OTF, short-term trader control type stuff, generally things change. We have the European rate decision tomorrow. Things change that cause us to reprice, and you want to be ready and not beat up. You want to be rested and kind of ready to hit the accelerator again once that yellow flag gets taken down and the green flag is up. Okay, so it's really important to recognize this. Now, let's look at the daily chart, daily composite. A few important things to factor. I took and I reduced my daily composite down to the last peak on the 20th of July. And I'm looking at what has happened since the last peak. Okay, I'm looking at this on two levels. I'm looking at this on two levels. And so there's the drop, there's this balance, there's the drop, and then there's the recovery. And look at where we are. We are up against a very, very big low volume node here. And that's where we're trading right now, and that's the area that we tested yesterday. And I am looking for this to rotate back down and reconfirm this rally day, move back into partially back into the balance zone below. This has pushed right up against the key low volume node. This is a big area here. I'll outline it with a line here, and you could see it right there at 120, 129 quarter, 130 is the low volume node in this area, and you want to just be careful in this area. Overall, look at what's happened to volume. Volume has fallen to a steady pace and directly in line with what is normal. That black line outlines what is normal or what is most common in this since this July 20th date. 1 million contracts a day. Yesterday we did 1.1, and we pretty much have done 1.1 to 1.2 with range falling. So if I extend this out, so we look at it, you can see how the range has collapsed. It has collapsed. It has recovered a little bit the other day, but it is completely dead here for the last 3 days and totally in line with the point of control at 13 points. We're not getting much more than that. The market is in a resting breather type phase, and if you look back in time, when the market gets into a resting breather type phase, you have an expansion here, almost double the range. You have an expansion in volume. There's resting, expansion, resting, expansion. That's balance moving to imbalance, and then with that, the volume picks up. The volume always picks up with the expansion of the range, right? So it's really important to keep your powder dry and be prepared and save up your energy for when the move happens. And that's how things are shaping up in the big picture. Don't lose track. We're trading in the August 21st range, and that was a big sell-off day. A different thing I want to show you here. Many of you have looked at this spaghetti factory of a chart. This looks really nasty, right? It looks like, oh my God, look at this guy. He's just pulling all this spaghetti together. You know, there's a trade in here somewhere. No, this isn't a trading chart. This is simply a line chart. It's a percent chart. It prints every 15 seconds, and it starts at 0 at the beginning of the session, every session. And what it shows me is the relative movement on a percentage basis, the relative movement of every product that I'm tracking. So I'm tracking the 5 key S&P 500 sectors, and those are the financials, healthcare, technology, industrials, and consumer discretionary. Those amount to more than half of the S&P. Just those 5 sectors. And on top of that, I'm tracking transportation. The 5 underlying sectors are shown in dashes here. I'm also tracking the Euro stocks, gold, the dollar index, the Japanese yen, and so on. I do this on a chart that refreshes every day. So when the session starts, I refresh this chart so I can see what is leading, what is lagging, and so on a daily basis. It's something that updates in real time. This chart, however, is the mother of that other chart, meaning it's what the other chart's built on, except this chart goes back to August 21st, 2015. That's the 0 line. So you can see the 0 line is right on that morning. This chart's only showing the equity session, so I'm breaking it down even though crude opens earlier and so on. I'm only showing what's happening in the equity session, and I'm taking this back to the sell-off day. And the reason I do this is I look at, okay, since we had that sell-off on the 21st, what has really led this rally? What is the condition of this rally? What have we done since? And basically what we have here is crude oil is the strongest since the sell-off. It's up 12% basically. Gold flatlined. It had some pretty decent rally days, but it really hasn't done much since that day. This next section is the underlying sectors. The orange being the transports. The transports are the transports are like taking a blood sample and checking for hemoglobin or whatever. Transports are the blood of the economy. If we're not producing things, they're not being transported, and therefore the transport stocks are not making money, and therefore they're suffering. It's kind of an indication of how things are moving around in our economy and what our production is and so on. So transports are something that I monitor all the time and are very important. And so I show transports here, and I show them with the 5 sectors, and you can see that healthcare, XLV, is the weakest since the recovery, with consumer discretionary and techs being strongest. Again, if you look at this chart down below, over here you see the Dow in purple, but right behind it in this kind of a brownish line is the NQ. The NQ, along with the tech sector, which is right here, are strongest. They are leading the pack. We could see the pullback through September, but overall there's pretty good strength on the industrials as well as the techs, with the ES lagging here. The ES lagging, and the DAX and the Euro stocks lagging as well. In the currencies, the Japanese yen is stronger, the dollar is weaker, the euro's flat since that sell-off day, and in treasuries, the US bonds are lower, the Bund's a little bit higher, and the 10 years are a little bit higher as well. So that's the overall picture, and it just helps me see who's leading, who is lagging, what areas to watch, what stocks do I need to pay attention to as far as news is concerned, to see which sector is pushing along. Let's get down to our hypos. I'm way over my time, but I thought that would be important to share with you. This morning we have really nothing new to process. There's not much we're expecting here today, and so we're opening in that upper HVN. I'm looking for this to open, test higher the prior day, just like we're doing. Again, we're in a big composite low volume node since the balance that we've had from the beginning of the year. We're right at the cutoff point. There's likely to be sellers to come in. I expect some strong selling to be initiated in this area, or attempted in this area going forward. So I expect this morning to open up, test higher, but I expect this to come back to the 2024. We extend this micro composite forward to see where the point of control is. The point of control for this micro is at 21. So I'm looking for this to test higher, be confronted with sellers because of that composite low volume node, and I expect it to be rejected, and I expect it to pull back, and then overall the target will be that 2021.50, 2021 quarter composite micro composite point of control, and I expect more of the same. This gives us a 4th day of balance, and we generally do not, the probability of 4 days of balance is relatively low historically, but I don't see any incentive for anybody to commit to one side or another yet, but I do see a big level up here, as I outlined on the composite chart, that there is a fair amount of resistance that we need to fight through, and I believe it's going to push to take out yesterday's high, pull back, chop, attempt lower, and then we're ultimately likely to push to 2043.75 because the buyers are in control, as we have seen over the last few days. That's my primary hypo. I'm way over my time. I'm going to leave you with that. Hopefully this has helped you in some way. Good luck, and I'll catch you tomorrow. Take care.